If you own XRP, you need to know this now. Please read the disclaimer. Hello, beautiful people. Shalom, moneymakers. Happy Monday. The crypto market is pulling back. Bitcoin, XRP are seeing lower levels than we previously seen before. The yields continue to pop and the fears in the market continue to rise. Is this an opportunity or does this mean that it's over for the crypto market? You guys probably know my answer to that question, right? But this is not an easy time right now for the crypto market. Currently, XRP is sitting at $1.39. Bitcoin is under 77,000. Down 0.61%. Bitcoin continues to drop here, and it seems that there might have been a buy the rumor, sell of news type of action for the banking committee markup. But it's not just the crypto market that is pulling back. Stock market is also down this morning, and oil is popping over $100. Again, this is coming with the potential of the yields continuing to rise and the fact that the probabilities of a interest rate reduction in the US, the probabilities continue to go down, and actually the probabilities of an interest rate hike have been going up. So this is a very interesting situation that is unfolding right now in the crypto market. As I said, the current situation is that the yields won't stop. Sunday night and the US yields went over 4.5, or actually hit 4.63%, highest since February of 2025. We are now 4 basis points above the high that prompted President Trump's 90-day tariff pause in April 2025. And this puts the 10-year note yield 70 basis points up higher since the Iran war, with US mortgages rates now potentially hitting 7%. And it's sudden turn events, the odds of rate cuts have actually collapsed to only 2% this year, and US inflation is nearing over 4%. This is a very tricky situation right now, and the crypto market does not have enough umph, right? Does not have enough power. Els actually did this, gave a good explanation here. He says many traders underestimate just how important volume is in the action of altcoin markets. When trading activity drops, even the best technical analysis starts to lose its effectiveness. The levels look perfect, the breakout looks valid, but the things, everything looks clean, but without real capital behind the move, the price often lacks continuity. And that's where the classic fake moves begin: sudden spikes, aggressive deviations, stop hunting, and immediate returns within the range. In markets like this, it's not a question of reading the chart better than others. It's the market itself becomes less efficient and far more manipulative. When volume is lacking, setup lose confirmation, stops are hit easily, the risk-reward ratio worsens, and volatility becomes messy and hard to read. And this is precisely where the real difference between those who survive in the long term and those who don't comes into play: risk management. You don't need to be exposed all the time. Sometimes the best trade is to simply wait, sit on our hands. We've learned this before. Sometimes doing nothing is better than being too active. I have fallen in this trap many times in the past where I overtrade. I get too zealous. I am on a roll. I have profits, and I start going into trades that I shouldn't, right? Because I'm like, oh, I just made X, right? And now I can do 1, 2, 3, 4. And history has taught me that many times, actually, a lot of the profit will not come out of that good one trade that went up significantly, but those other ones that you try to, oh, let's find the next one. Let's find the next one. And that next one gets you in trouble. Okay, so this is just, again, my experience, my opinions. As always, remember, this video is for educational purposes, for entertainment purposes only, not financial advice. Always do your own due diligence before you decide to invest. Also, remember that I will never contact you on social media asking you to sign up to anything or to send me any money. Those are scammers, those are imposters. Please be very careful out there. So he mentions here reducing position size, protecting capital, and remaining selective does not mean being afraid of the market. It means understanding the kind of environment you're operating in. Again, this is exactly what I have fallen into in the past: going too large and going too fast and doing too many things. because ultimately capital needs to be reserved during turbulent times so that you can be aggressive when the market returns to offering truly favorable conditions. When everything's running, it's a lot easier to do what I just said. But when you have one asset that is running and you make a success on it, then you start, okay, what's the next one? What's the next one? So that's the trap that sometimes I have fallen into, and we need to be very careful with that. We also had we have this week Fed meeting minutes on Wednesday coming out. We'll see what President Trump, of course, is going to do with the whole Iran situation, and that's coming. We also have Nvidia earnings this week that could affect the stock market. By the way, I did start a new channel. So if you're interested, we got the Moneymaker Stocks channel here. Actually, the first video was very successful, almost 5,000 views there on a new channel. That's really, I didn't think that would happen. So if you're interested in more stock talk, more individual stocks and things like that, that's going to happen on that channel. I'll also try to do 2 a day. So we'll see. I'm doing work here for you guys. So if you're interested, I know a lot of you subscribe to this channel initially for more stock talk. So if you're interested in that, move over to that channel. Again, there's only 329 subscribers on the channel. So let's move there if you're interested in stock talk, and we'll keep this channel pure crypto. Okay. Oil again popping as Iran resumed drone attacks across the Gulf region. So again, this is affecting what could potentially happen with interest rates. And we know that crypto loves low interest rates. So the more the oil prices rise or they stay higher for longer, the higher or longer inflation stays high. And then those probabilities that we were talking about, that even with the new Fed chairman in Kevin Warsh, the probabilities of a reduction are very, very small right now. And even there's a possibility of a rate hike. The crypto market is not fond of that. Okay. So we'll see what happens with that going forward. We did get some good news from the China talks. So the White House announces that there were multiple U.S.-China trade deals and developments following President Trump's meeting with China President Xi. Details included China will address U.S. concerns regarding supply chain shortages related to rare earths and critical minerals. That was important, if you remember. That kind of brought on the announcement on before October 10th, where Trump put out that he was going to give those aggressive tariffs. Part of the reason was the critical minerals. So we'll see, how that plays out. China has approved the initial purchase of 200 American-made Boeing aircrafts. China will repurchase at least 17 billion of U.S. agricultural products. China will restore market access to U.S. beef, and China will resume imports of poultry to the U.S. I wonder what's going to happen the other way. What is the U.S. going to do for China? Well, we'll see. That could potentially come out. I guess the White House is just they want to look good, not what the U.S. is giving China, but what China is giving U.S. There's probably more behind that. That's of course a tactic, and we'll see what Trump is going to do here, in the next coming days. Now, this is interesting from Raoul Paul, and he's been a big believer in that the second quarter of 2026 was going to be very good for the crypto market. So far, that hasn't happened. Every single investor, every single trader thinks that things are going to happen, and sometimes it plays out, sometimes it doesn't. You've had, there's, for example, the famous one is Robert Kiyosaki, has the Rich Dad Poor Dad author. He has had some successes and some flops, right? He's had some predictions that were very good, but he also predicts the greatest crashes of all time many times in his videos and tweets, and that hasn't happened. So again, every single trader, every single investor is speculating. They don't know what's going to happen. They try to figure out what is going to happen with high probability. Sometimes that happens, sometimes that doesn't. That's why there's always risk in investing, okay? It's very, very important to remember. Right now, the crypto market is, I think, at a low point. I think if you go and you look at viewership and interest right now in the crypto market, after the Clarity Act and the fact that we did not break out there, I think people are losing it a little bit. But I know from my experience that these things change very fast. One tweet from President Trump, one, vote on the Senate floor, and everything can change. And that's why I continue with my plan. I am diversified. I invested in crypto. I invested in stocks. I invested in real estate, right? And this way I can have myself a better base that if crypto is weak, well, stock market is doing amazing right now. And maybe there's a pullback in the stock market and crypto doesn't like this. These things can change very, very fast. Hopefully you get a triple, effect there and everything is doing good, but that's very rare where everything is doing good. Okay, so it will be very interesting to see what happens to the markets. Okay, um, and we will potentially see. You look at it and you look at the potential of what's happening and where we're going. And MoonPay president says that crypto is getting legislative clarity, regulatory clarity, banking clarity, and accounting clarity, all four roughly at the same time. In every other ecosystem got just one of these, it would be massive catalyst. Crypto is getting all four simultaneously. The capital inflow phase hasn't even started. Right now, again, the volumes are low and the crypto market is being manipulated and moved up and down in a way that is very annoying. But like we talked about here with Ellie's, I think, post is the fact that there's not a lot of interest. There's not a lot of money right now. There's not a lot of volume in the crypto market. And because of that, the algos are manipulating the price. The algos are taking advantage of the fact. And you can see we get a little bit of a run up and then we pull back. We get a little bit of run up and then we pull back. This is a tactic that short sellers have used multiple times in the past. It's not nothing new. It's not nothing that we haven't seen for the crypto market. I'm not getting discouraged from this, but yes, it is annoying. I understand, especially if you're trying to, day trade or swing trade. This can get very annoying. But on the flip side, because it's kind of a pattern, then you can take advantage of it if you're trying to actually day trade, swing trade. You just have to have a set of rules in place that you don't, get in love with the position and, not have a stop loss or not have a take profit. And then you get into a situation where you might make and then lose everything. So that's the tricky situation right now that we're seeing inside the crypto market. There are potential that this week, plays out in a good way, and that President Trump doesn't resume the attacks, and the markets and the yields start coming down, and the market could potentially go up. But remember, we've talked about this in the past. This is again my opinion, what I am seeing. The crypto market loves low interest rates, and as the probabilities of low interest rates go down, right? The potential of hikes is going down. Sorry, the potential of reduction is going down. That is hurting right now the crypto market. But just from a standpoint of regulatory, clearness and the potential of institutional money coming into the crypto market, right? Because right now the interest rate for stock market and the interest rate for crypto market, it's the same. Right? But yet the money is going into the stock market, and specifically a lot of it is going into anything related to AI. And if you go and you look, actually, many companies are not doing great price action, whereas the companies that have something to do with AI are doing really good. And so that is also a problem, because if, for example, this week Nvidia's earnings are not great, that bubble could potentially pop there. And then where does the money go? Does everything start pulling back? Could the crypto market be reacting to Nvidia earnings poorly or positively? We're going to find out during this week. It's going to be a very interesting week. Again, we maybe did not get the price action we wanted in the crypto market and XRP, but we definitely got the result that we wanted, that Clarity Act passed the banking committee. Of course, if Clarity Act would have not passed, it would have been even worse. So that scenario did not happen. And we're in the best case scenario. Again, just price action is not great right now. But again, if you are a long-term holder of XRP, of crypto, then yes, on the surface, if you look at your portfolio, it's not looking great right now. But if you're a long-term investor and you have certain goals for the crypto market, certain price goals, then it doesn't really matter that much if XRP is at 138 or 162 or 4 or 5, right? Yes, you could potentially look better to your friends and the underlying number looks better on your phone, right? But if you're not going to relieve the position at 4, you're looking like, say, for 2 digits, right? Then it doesn't really matter. But again, it's not easy on the heart. Believe me, I know. I know. I'm just like you. I feel the price action, and I try to work on this part. It's very hard. The mental part is the hardest part in investing and in trading. I believe that it's about 9% know about. So knowing what's happening in the market, what's happening with geopolitical stuff, knowing technical analysis, knowing the ins and outs of trading. 89%, is that enough percentages? Yeah. 90% mental, right? That's what I have noticed. My successes and my downfalls have been because of the mental side. So I think it's much more important than knowing all the other stuff. And 1% luck. Sometimes you open a position and there's good news and there's momentum and earnings are good, or there's a new partnership or something like that. And sometimes you get bad news the next day and you're unlucky. So there's all kinds of things that could potentially develop. So just be ready for every single type of scenario. Again, not financial advice. Always do your own due diligence before you decide to invest. Don't forget to drop a comment, 8 for infinity and beyond, in the comment section. Smash the like button. And again, if you're interested in the new channel, go check that out. I'll put a link here in the description down below, and you can start that journey as well if you're interested in that topic. Okay. Thank you for watching. I hope to see you next time. And like I always say, let's make a lot of money.